balance in the sales ledger control account. Just now I say balance BD for sales ledger control account is total of 880. So now I double check. The total for my trade receivable balance CD for Smith is 170. John is 510. Walker is 200. Thomas, because it's bad debt already, so I can't have any balance CD anymore. So my total trade receivable will be 880. Is it same? Balance is show on SLC is 880, so means that no error happens. So this is the purpose I'm preparing the control account. So since you already understand the SLC, so come back to my PLC now, Purchases Ledger Control Account. This will be same as my SLC concept, just that SLC, I see it as my total trade receivable entry, right? So now when I prepare my PLC, that time I must imagine this is the total trade payable. So trade payable increase will be debit side or credit side? It is credit side. So SLC increase will be debit side. They are different. Okay. So now refer to as a total trade payable account, and also they get the information from book of pride. I won't explain the book of pride here anymore because in the previous slide already recap. So the total balance on all the individual credit supplies accounts should agree. If there's not agree, means that there's something errors happen. Indicate there are errors and you need some further checking. Okay. So when I come to the example, exactly the same example. Wait, I think I forgot to amend this. So David is a trader. He purchased. I changed the sales to purchase. Purchase goods on credit for the following supplier: Smith, 500, John's, 550, Walker's, 400, and Thomas. Thomas, you can just ignore because I erase it since there is no bad debts happen in the trade payables. So I just ignore with the. Okay, I'm going to cross it. So this one, no. Okay. Okay, and David returns the goods to Smith, the credit supplier, with the amount of 50. So this is purchases return, and John's, which is return 40. I mean, I return back. Example, imagine that I'm David. I return to John 40, my supplier, my TP. So number two, David later make a payments. I'm David. I pay to Smith 294. I pay to the Walker 196. And after the cash discount, so cash discount they already mentioned here 6 and 4. Okay, the question basically exactly the same. So I just one thing I need to highlight. So whatever the total is wait. Same again, I need the book of prime entry information. The green color is all the book of prime information. What else? 1, 2, 3. Okay, 3 only because there is no bad debt. I changed the question. So from here, the green color is book of prime. First thing first, the purchases journal here, I need to know total how much I have for the credit purchases, which is the question mentioned here, 500, 550, and 400. So I will put it in the credit side. Why credit side? Because this one I trade it as a TP entry. Debit will be minus, credit will be plus, the liability increase. So when there is I owe people money, I will put under the credit side. When I pay people money, it will reduce the amount owing from the credit side. So as usual, if there any return, I put debit side. Cash book, if I pay them, and debits. Sorry, DR is discount receive. Short form. Discount receive is this column. Okay, I point it for you. This column. Okay, from the cash book. So for 10, and then balance CD will be 880. So I will going to total every single TP from my purchaser ledger here. Then I compare. If the TP balancing here is same as the balance I prepare in a PLC, that means that there is no error. If there is not same, you must recheck for every single TP here with the control account information from purchases journal again. See here, actually it's example 2 lah. So the balance from the individual accounts in the purchases ledger should be equal to the purchases ledger control account. So my total balance CD from the TP will be 170, 510, and 200. Same with my total PLC balance CD. BD for next year, CD for this year. Okay. To discuss the last two parts. Balances appear for both sides for their control account. Both sides of the control account means that if there is two balance CD. So why there is two balance CD? As you know, SLC and PLC is the total trade receivable and total trade payables amount. So in this CD, means that total credit sales and total credit purchases, because I use the both of prime information. So I must call it credit sales and credit purchases. Okay, so now if some of them they pay more, or some of them overpay, or some they still owing. So in this situation, because my SLC PLC, as I mentioned just now, they are recording the total. They are not recorded by single TP or single TR each T account. They are total lump sum and put it there. So in this information, they will show a balance CD for some or certain of the TP or TR they haven't paid yet, and another balance in the other side, or maybe debit or credit as a overpaid. Okay, so occasionally an abnormal balance can show in the control account. This is normal. So this may occur due to the overpaid. Customer pay you more, or you pay your supplier more. So returning goods after paying the account. So after you, let's say you pay your TP 1,000, fully payment done, settlement, fully settled. So in this situation, then only you realize, oh my God, there is some of the products are broken. So you need to return back. So in this situation, you will have you have two balance in debit side and credit side. And paying in advance for the goods, as I said, the overpay, and the cash discount is not being deducted before your payments was made. So actually you are entitled for the discount, but the thing is you forgot to deduct. So in this situation, you need to you will show two balance CD in one SLC or one PLC account. They might have contra entry as well. Means that, example, SL's sales ledger control account, the TTR also sell things to TP. Okay, example, I make it simple. I am the person who sell A person a product. Okay, so on credit, so A is my TR right now, right? So and then at the same time I also purchase from this particular ATR with their products also on credit. So in this situation, we can set off each other for the amount owing. If I owe more than what she owe to me, let's say I owe her 100, she owe me 50, and then I will top up only 50 for the payment. I do not need to pay or receive from her the $50. So this is called contra entry. All right, we go to the contents here. As known as the inter-ledger transfer or set off. It may happen that a business sells goods to another business and also buy different goods from the business. This means that there will be two accounts for that business. One is in the sales ledger and the other one is purchases ledger, as I mentioned the example, the TRA just now. So rather than each other sending each other check to cover the amount due, why not they just agree to set off each other account? So any remaining account or the amount will be settled by one business issuing the check. So this one is very clear cut. If I owe you or you owe me also, we just set it off from the account, and I don't need to purposely write in the check